Welcome back, my awesome people. In today's episode, I will be highlighting my favorite ETF management firm, Purpose Investments, and the new series of ETFs that they have created. They are the same investing firm that created and manages the ETHY, ETHY, and BTCY crypto ETFs, which has been providing its shareholders, like myself, with an enormous 13% annual yield and monthly dividends. On top of that, you can check out the multiple videos that I have posted on my page detailing ETHY and BTCY, and hopefully it will give you details on how you can get a great monthly dividend from Bitcoin and Ethereum without staking those coins. So, Purpose Investments is an asset management company with over $14 billion in assets under management. Purpose Investment offers a range of managed and quantitative investment products, and over the years, Purpose has consistently earned a reputation for innovation in the investment industry. And one of the coolest Canadian ETF releases recently was Purpose Investments' suite of yield shares. For those that are out of the loop, these are Canada's first single stock ETFs and the first yield-focused single stock ETFs in the world. These new ETFs are complex to say the least, combining options overlays, leverage, and single stock exposure. For all the Canadian investors out there watching these new ETFs, this video will give you an insight on how these funds work and if it is worth it. Currently, Purpose Investments has a total of 5 different yield shares ETFs on the market that charge a management fee of only about 0.4%. The Alphabet Yield Shares Purpose ETF, ticker symbol YGOG. The Amazon Yield Shares Purpose ETF, ticker symbol YAMZ. The Apple Yield Shares Purpose ETF, ticker symbol APLY. The Berkshire Hathaway Yield Shares Purpose ETF, ticker symbol BRKY. And the Tesla Yield Shares Purpose ETF, ticker symbol YTSL. Because Purpose is a modern investment firm known for its globally innovative client-centric products, yield shares by Purpose are designed to offer investors a new tool to maximize yield in their portfolios. Investors will be able to earn an enhanced monthly yield from their individual stock exposure and benefit from the long-term growth potential of underlying stocks of companies like Amazon and Tesla. And Canadians will be able to get exposure to individual US stocks in Canadian dollars. Many of the US stocks tracked by these ETFs either pay no dividends like Google, Amazon, Berkshire, and Tesla, or pay very small dividends like Apple. So by adding a covered call overlay, the Purpose Yield shares allow investors to hold their desired US stock while receiving regular dividend income. And currently, the dividend yield ranges between 5% and 10% depending on the ETF that you decide to buy. And the yield generated by the covered call strategy will be tax efficient as it can be held in your TFSA or RRSP. These unique yield shares by Purpose will seek to generate distribution yield above any dividends payable on the underlying stock. And this is done by implementing covered call option strategies targeted at 50% and moderate leverage targeted at a maximum of 25% to earn enhanced monthly yield on highly reputable global companies. Yield shares will provide investors with a different risk-return profile compared to investing in the underlying stock directly and can be used as additional tools to customize their portfolios. As their name suggests, each of these ETFs has a single holding, and the yield shares also makes use of a covered call overlay. The calls sold will generally be at the money or up to 5% out of the money. For those who are not familiar with options, it's a simple way of saying, I'm trying to mitigate my risk and have more control of my stock. Therefore, by buying a yield shares ETF, investors receive exposure to the price movements of the underlying stock in addition to monthly income from the covered calls, and the dividends are massive. As an investor, you also need to consider the difficulty of running a covered call strategy without these ETFs. For example, if I wanted to sell one Tesla covered call, I would need to buy 100 shares of Tesla stock for collateral. Currently, Tesla trades at around $245 per share. So if I wanted to buy 100 shares of Tesla, I would have to fork over $24,500. Or on the other hand, I could buy YTSL, the Purpose Tesla ETF, for around $25 per share and benefit from a professionally managed cover call strategy without needing to buy 100 shares of Tesla and sell calls myself. These types of ETFs also saves you the need to margin a Tesla position on your own, which isn't allowed in a TFSA or RRSP. So the yield shares provides convenience and capital efficiency. As with most covered call and mostly leveraged ETFs, the usual risks to watch out for are market, leverage, and derivative risk. If the underlying stock does poorly, the corresponding yield shares will as well, perhaps to a higher degree due to the leverage. In addition, the options overlay is subject to a range of factors that could influence its performance. These types of ETFs are starting to gain popularity as investors are looking for alternative ways to invest in popular stocks without all the politics and red tape. And what I mean by this is I have more advantages by buying ETFs like this compared to the actual individual stock. As I mentioned earlier, the dividend payouts are much superior in the ETF. The tax advantages of holding the ETF in your TFSA or RRSP are also a massive advantage. And of course, not having to pay for conversion fees to convert your Canadian dollars to United States dollars. When compared to buying an individual stock, a single entity ETF has the same risks, but a lot more advantages and upside. Why buy Tesla for $245 a share when you can buy it for $25 Canadian per share and gain all the rewards? So Jacob Rant, have you bought any of these ETFs or are you just watching them for now? Well, my awesome people, I am definitely going to be opening a position with Tesla's yield share very soon. When I found out about these ETFs, YTSL was sitting at about $18 and currently it's sitting at about $25 due to Tesla's run up the past few weeks. The Tesla ETF will be the one I will be watching and opening a position in, as I believe that compared to the other ETFs, it provides a much higher dividend yield and Tesla's future is guaranteed to be bright. Tesla is not just a car company, but instead a tech company, as they are paving the way for a technological revolution through AI, artificial intelligence. Plus, now that Elon Musk has brought his focus back to Tesla, and with the ramp up with building more charging stations, Tesla will surely be a company that eventually hits $1 trillion market cap. But other than Tesla, Purpose's ETFs are managed very well and have brought me plenty of monthly returns from their other ETFs like FE and BTCY. So when Tesla goes through another massive dip, I will be starting a position with YTSL. And remember, my awesome people, just like all the information I mentioned in my videos, assess your risk, always diversify, and please do your own due diligence because I am just a clown on YouTube. Stay ranting.